Tax Talk will not be seen tonight, so we can bring you this very special presentation live from Detroit. You're watching Tax Talk Live with Markway Boyd.
And how, what triggered you not being able to work at all? Is it because you were working?
Factory injury.
Yes.
Job injury.
Again, a factor injury is your employer that determines whether it's workman's compensation or sick pay. If it's workman's compensation, it's not taxable no matter how long it is. But if it's sick pay, it is taxable no matter how long it is.
Okay. So you're on full disability.
If I was on disability, would I qualify for Leave No Job Behind, and could I sign up for your class, and would you be able to address exactly how to structure myself?
If you are on disability and you want to get in the No Worker Left Behind program,
Yep.
well, the No Worker Left Behind program is for people that are laid off or are not laid off but working but make less than $40,000. So you automatically qualify because that's the condition. You are either laid off or you're working and making less than $40,000. So if you're on disability, that means you don't have any earned income at all. If you want to start a business, you can.
Got it.
I ran across a guy the other day that was in business for years. He said that you don't have to pay into Social Security if you have distribution of profit. What is distribution of profit?
Distribution is more or less like a dividend that you earn from investing in a business. Okay? So let's say you have an S Corp. If S Corp pays you wages, you have to pay Social Security and Medicare on it. If it's a distribution, which is a dividend, that is not tax. You can't tax Social Security and Medicare on distribution because it is not considered earned income. It's unearned income. So what he's trying to tell you essentially is, if you have a business or a corporation and you pay yourself income, that income will be subject to Social Security and Medicare. But if you take a distribution from the business, you don't have to pay Social Security and Medicare. That's what he meant by that.
Okay, how do you do that?
Oh, that's what you come and pay me to help you do that.
About the No Worker Left Behind program as well. So one of their eligibility requirements says termination, comma, laid off, comma, employed, making income less than $4,000. Question is, the termination part of it, I took a buyout, early retirement pension. Does that qualify for the program?
Well, that depends because the $40,000 is, if you are receiving pension, that is income.
Right.
So if your pension is less than $40,000, you qualify.
Okay. Second question. Small business profit and loss statement related to hobby classification versus how much money you profit. Now, a philosophy that I have a question about is, if you are not making a lot of income in that business as a profit, and you have a whole lot of expenses, and you want to avoid being classified as a hobby, you have the 3 years that you have to you can only get that classification 5 years, or you telling me stuff?
No, 5.
Okay.
5 years.
So
Keep going.
after that 5 years, if you are showing, let's say, minimal profits on your profit and loss statement, and you've understated your expenses, so you did not claim a number of expenses that you have just so that you do break even and show a slight profit, and then you pay taxes on that profit, versus you understated your expenses, you really had more. And if you were to go under an audit or to do an amended tax return, you could show more expenses. Is there a problem from the IRS perspective with that?
Good question. Very loaded question, isn't it? Okay, I'll take each one of them piece by piece. There is a misconception regarding what you just said, and that's what most people believe. And the misconception that here is this, that if you are in business for 3 years, but it is actually 5 years, and you show consistent loss, that means you are not really in business. That is false. It is not true. Guess what? There is nowhere in the IRS code, I repeat, nowhere else in the IRS code that says that if you are in business, you have to make a profit. None. What it says in the code is you have to have a profit motive. That's it. You have to have a profit motive. What does that mean? That means your goal or your intention of going into the business is to make money. But if within the 5 years your intention is to make money and you have not made money, does that make you not a business owner? No. It's just that you just might be bad at what you do. Right? That's what it actually means. And so, to answer your question, you can have a consistent loss for 5 years, 6 years, 7 years. If you can justify that you are trying to make money, but you haven't made it yet, that is okay. Now, that's the first point. The second point that he alluded to was the fact that what is the difference between being a business owner and the business being classified as a hobby? Well, that is one of the things that the IRS agents are trained now to do, and that is to try to make your business seem like it does not have a profit motive. Now, why is that important to them? Let's take a business that was.
For more information about Smart Business PLLC, contact Markway Boy and the professionals at 248-395-3388.